8th, and a big day today in the news department and a lot of things going on. We're going to start out with the dollar. The S&P rating of Greece went to a double B plus, which is basically a junk bond rating. Bonds actually traded at 21% overnight. That was just unbelievable. Portugal also got revised down to an A minus standing, and the EU president tried to stabilize things by saying that Greece would get their money on time for an adequate bailout, but Germany is really backing away from this thing, creating a very tenuous situation. Greece, Portugal, Spain, Italy, and Ireland are in big trouble, and one analyst can be quoted by saying their problems are 3 times the size that the U.S. woes were. So lots to get through in there. The dollar this afternoon is at 82.49. That's up another 17 points right now. 78 higher, I'm sorry. We're 100 higher for the week. In the crude oil, we're at 83.18. That's up 74. That's 200 lower, though, for the week. The EIA data came out today. Crude oil did see a build of 1.9 million barrels. The product was relatively mixed, but the crude oil was a little bearish. Crude oil seems to be holding support on the chart at 81.50, and that is providing a place to be taking some profits on short positions or initiating longs. $87 is resistance, and that probably will stop the market for quite some time now, since supplies are coming in so high around the world. In the corn market, we closed at 364.5. Now that was 10 3/4 higher, and we're up 3.5 cents today on the news that China finally did buy, and it was confirmed, 115,000 tons of GMO corn out of the United States. Now that's not a lot of corn. That's 4.5 million bushels, and most country elevators will handle more than that in a year. But the significance of it is that this is the first significant purchase of U.S. corn in about 14 years. Not that they don't buy every year, but they, like last year at this time, they had bought about 89,000 tons. Right now, though, this year they're up to 173,000 tons. Now, we believe that this was a deal done between Dreyfus and a private importer, and that they'll still need to get an import license for this, and they'll still need to get it inspected for quality and unloaded. And those are questions that we don't know will ever happen. If they don't get it unloaded, they'll just resell this to South Asia somewhere. But many traders are thinking that this is the beginning of something big to come. So let's try to quantify that for you. Something big to come would be 4 million tons. 4 million tons would be more corn than they'd ever bought from the U.S. before. If they bought that amount of bushels, it would be 160 million bushels. Now, we've got 1.9 billion bushels in carryover, so it wouldn't significantly change our situation from a secure stock situation to a tight stocks. But from a market mentality, it would certainly add value to the market. July corn has resistance right now at 368 to 375. If they can get through that, that would be bullish. Right now, good planting weather is capping the market at those levels. Support is at 350, and this Chinese news and strong demand is going to provide support at those levels. Now, delivery receipts are at about 878 contracts, so deliveries probably cannot exceed that. We're looking for deliveries tomorrow night to be less than 500 contracts at this time. The funds are currently long about 8,000 contracts, and the index funds are long a whopping 402,000 contracts. So huge positions there. Exports will be out tomorrow. We're looking for 700 to 1.2 million metric tons. Hopefully it'll be at the high side of that range. In the beans, we're at 994.25 on a close. That was up 1.25 cents. We're 15 3/4 lower for the week. No new business is really the name of the game here on U.S. shores. But rumors are China did buy 4 cargoes of Argentine beans. Now, no bean oil, which had been rumored earlier, but at least the beans seem to be moving. The talk is, though, that they did get some bean oil bought out of Brazil. Now, the situation on Argentina and China is that there's been no agreement or no progress on their talks about resolving the soybean oil dispute and other trade disputes. It centers around in bean oil about the residual Solvent residuals still at 100 parts per billion, and versus the 350 that was proposed, and so we don't see any change in that just yet. Exports tomorrow, 400 to 1.1 million tons. We'd like to see the top end of that. Last week it was terrible. It was only 368. We really need to see a pickup in exports in order to exceed USDA's projections. Deliveries will be Thursday night, tomorrow night after the close. We're expecting somewhere around 400 contracts to be delivered. The July contract has support at 988, and this is key. If we breach that support, a lot of the chart and computer trading systems will want to go short. Right now that's holding, and it projects the market to go back up and test resistance, which is at 1004 to 1020. In the wheat market, we closed at 488, down 2.5. That's 17 cents lower for the week. Exports are just completely restricted out of the U.S. The only thing we can get rid of is GSM business and donation business. Exports estimated for tomorrow are between 50 and 350,000 tons, and the problem is price. We are at $4.96 today on July wheat. The world market's at $4.40. Nobody wants to buy our wheat. Resistance is right at $5 on the chart, so we're right where you probably ought to try to sell. Supported $4.40. That's where you'd want to cover. In the hog market, we closed at 85.07. That was 12 higher for the day and 10 lower for the week. Canada's hog herd came out in a report down 2.1%. Fourth year of continued liquidation. Supplies are very tight, and here at home, if you did not listen to this video, you've got to do it today. There's a video showing you why the market's going to go a lot higher based on the supply that we have and the demand that we have and how it all equates to. You got to go to Allendale, and I believe the link is right on our front page. Isn't it great? If you get lost and can't find it, give us a call, but it's a link to the weekly meetings, and we have it broken down into different sections of our meetings. You don't have to listen to the whole thing, but go to the Livestock link. I think there's a chart there that talks about hogs. Click on that chart, and it'll launch the meeting. It's a great synopsis. It only takes about 3 minutes. Also, China did talk about raising poultry import tariffs to 11 to 31% versus the 5.4%. So this could slow down some of our poultry sales and back up some meat. So maybe we're going to see some volatility here. Look for a range between 82 and 88. In the cattle market, we closed at 93.62, down 10. That's $1.20 lower for the week. Last week, very strong. This week, we're backing off. The cash market's about 50 lower at 98 to 98.5. Cattle market should trade in a range between 92 and 96. We're out of time. Give us a call. It's 800-262-7538, 800-2-MARKET, or go to our website. Look up that special research report at allendale-inc.com.